So I'm going to show you what ChatGPT says, and we can go through step to step. So commitment of traders report. It is a weekly report that shows how different groups of traders are positioned in certain futures and options, option markets. So the key thing that you should know here is the group of traders that are in. So the group of traders or investors include non-commercials, commercials, and non-reportables. So you should know that the non-commercials are the investors that drive widely the market. The If you see the market is going on a bullish trend or bearish trend in the long term, so that is the non-commercials according to the experience that I have. The commercials are normal hedges. They go against everyone in the market. And commercials are normally the big banks. So they have much liquidity. So yeah, it is very important for you to know that what kind of investor are you. And the non-reportables are people who are there, are unknown that are there. So yeah, I normally go with the non-commercials because I want to go with the trend. So yeah, this, as you can see, um, it's showing us the types of traders that are in. That is, yeah, they're in commercial traders and commercials that are the large speculators and reportables, small traders. So yeah, this is generally what CFTC Commitment of Traders Report shows. These three groups. It is released by the Labor of Statistic and blah blah blah, like the Feds, the United States Labor Statistics Organization. It is released weekly, but the original format that is released a document is very hard to decrypt. So normally other companies usually decrypt it and share. So telling you this in simple terms, Commitment of Traders Report, it is a weekly report that shows different kind of investors that are going in and getting out in a specific future or options, namely maybe currencies, metal, commodities. Yeah, that is in simple terms the meaning of Commitment of Traders Report. Now let's see how this report is. So normally it's like this. Yeah, it's like this, the original one, and that is given. But the easier one that the other companies decrypt. I have one. It's in Telegram. Yeah. If you wanna know it, you can just write Commitment of Traders Report there, and it will link you up to this channel that they post every week. So let's see. Okay, this report shows, as you said, all participant types, including non-commercials, commercials, and non-reportables, right? So basically it shows this columns, the columns of the types of product, meaning that you can see it's major currency, exotic currency, cryptocurrency, metals, commodities, and indices. It depends on um what kind of product you trade, what kind of future option you trade. And it is grouped into non-commercials, commercials, and non-reportables. In each, there is this thing. Let's start with the non-commercials. There is net positions. This is net change, and this is net percentage of net change. I think that is simple to understand. Um, let's go to the numbers. So net positions. So net position simply is the difference between longs and shorts. that that happened on the specific or previous week. And let's say net positions of this week, of last week. Let's say buys was 70, right? And sales was 20 positions. So the net position is 50. 70 buys minus 20 positions of sales, that is 50. That is the net positions. So yeah, I think that is clearly understood, probably. And net change. So net change is simply the difference between net positions of this week and last week. And this is the percentage of the net change. So yeah, let's go to the numbers and I'm gonna show you step by step, and I hope you're gonna understand. So let's say here, you see the net change of the US dollar index from last week to this week is plus 1,483. So that means from last week, um, this number has increased. That brings a total of 17,197. So, in other words, if you take 17,000 minus this net change, you're going to get the net positions of last week. So that means this week, investors have increased on buying the US dollar. And initially from the commercials, as you remember, I see that there are hedges. They usually go against everyone. Uh, Every, yeah, every investor. Even in all the charts, you can see they are different. They usually go against and none, and this these are the non-reportables. Sorry. I usually don't consider much. I usually consider this the first one and the second one much, because in rare cases you might find non-commercials and commercials are on the same page, and probably that is the week where money is it's rare to occur, but if it does, there is a huge amount of money. That there's a large opportunity on the market on that week. For example, on the previous NFP week, both non-commercials and commercials were bought US dollar and sold gold, both of them. And I think, oh no, probably it's the vice versa. They bought gold and sold the US dollar, and that made the NFP week go to buying. So I probably on studying NFP I have a different strategy and documents, but on that week that is what happened. Gold bought. So yeah, this is what I look. For example, I like trading gold. This is the current week that is starting. Today is the 2nd of August, Sunday. So this is the report that I'm going to um decrypt so that you might understand, and probably it might help you too. So I like trading gold. So I just go straight to the gold report, and I see this gold from last week to this week. There's been a net change of negative 1,840, and these are the net positions, right? But commercials and non-reportables are bought it, right? But the US dollar is strong. Non-commercials are bought it. So comparing gold to US dollar, that means gold is gonna be bearish. So USD. That's why I'm taking this as an example. And I also did this for last week. Um, let me show you the last week's report. Uh, so this is the last week's report. Gold also was bearish. Gold investors were dropping. and investors investors were buying or getting in. So I concluded that gold was dropping, and I analyzed it last week, and I made a video on it on my YouTube channel. Let's see, yeah, and I concluded that when price reaches this point, price is gonna drop on gold. And by that time, price was around here. This was the market open that happened. This bullish candle. As you can see, this was Friday, and this was Monday. So yeah, I analyzed, and price dropped more than 1,000 pips, right? More than 1,000 pips. So this was last week. This is how I integrate the CO2 report to the gold chart. So um coming to this week, there are two things that I'm looking at. So gold is gonna be bearish, right? This excludes NFP. I'm not saying that because the report says bearish, that means the NFP is gonna be bearish. No. This is technically speaking. So yeah, gold technically it has led to this BOS on the 4-hour time frame and has left this inside formation, right? On the 4-hour time frame. The price on last week came to this same level and went down. And so this acted as an inducement, then came in to the trades, the two people that sold here and started going down. So probably I'm gonna wait for price to come back here. But at the same time, there's liquidity that is left. This is the highest point. That's why I've marked this space. So my 2 points are this and this on the coming week. So yeah, that's what I do on uh on this commitment of traders report. So this is the first step that I do. So there's a second step. Normally this is the major one that lies here, but there are other reports that show each product. For example, um, let's say this commodities. So this, oh sorry, this is oil, then metals. We have gold. So we can see that this long, short, change of long, change of short net positions is the ones that I've seen on the other report. And there's this last column that is called the open interest. So open interest, I'm gonna do a video on this to explain because it's kind of confusing. I'm gonna let you guys take with this one for today, but I hope you guys have enjoyed and have understood. And I wish you a good trading week. Thank you.